History is currently repeating itself, as those indicators right here are currently signaling a recession warning. And so to understand the latest price action here at natural gas, in today's video we discuss the most important technicals, fundamentals and also macroeconomics of this commodity. We have recently seen that natural gas topped out here in the end of January. We've seen that mark the beginning of this massive sell-off that we've seen following. We've seen that coincide to this cross here at the bull market support band, which actually marked the beginning of this massive sell-off. We've seen also that volume delta has been spiking to the downside. However, we've also seen that it actually came back to neutral levels recently. We've seen that bearish breakout here at the RSI to the downside, which obviously also suggests we might see that continue this downward trend here at the natural gas price, as we've seen it happen here with the bull market support band. If you have a look at the hourly chart, you do see that we're currently again retesting this level at around $3. Which is obviously a major support level here for natural gas, as we've retested it several times. And also obviously this long-term blue trend line here, which is actually marking this long-term trend, that is obviously also a major support level. And so we are currently retesting those supports, and whether we're actually about to see a breakout to the upside here at natural gas, or whether we're about to see a breakout to the downside of this massive support. That can only be answered by taking a look at the past cycles to understand the underlying drivers of this commodity. And as you can beautifully see here on the weekly, we do have so-called cycles here at natural gas. We do tend to see lows and highs actually move in cycles, and we've marked the last few cycles here. You can see the duration. You can also see those last few bottoms that we've seen. And as you may already have guessed it, we do actually have history repeating itself. You can see here at the copper to gold ratio that you do tend to see that those divergences where you do have natural gas rise and copper fall. And whenever you do see those divergences that we've seen several times here, those are actually quite bearish signals, because obviously copper is this industrial metal, and whenever this is actually moving to the downside, whenever, or measured against gold, whenever you do see that natural gas is still rising, that historically always marked massive downturns here at the natural gas chart. And in correlation to that, you tend to see that the S&P 500 measured in gold is actually gold measured against the S&P 500. You can actually see that this is trending higher before those crashes actually occur. You've seen that happen here in 28. You've seen that happen here previous to this downturn in 2011, 2012. You've seen that really happen several times, and it always marked the beginnings of those massive crashes that we've seen happening following here at natural gas. You've also seen, obviously, those divergences happen for quite a while, and we are currently having history repeat, because we do see that copper to gold ratio still decline. We do see that the gold to S&P ratio is rising. And so if you actually would measure the S&P 500 against gold, the top would have been here back in 2021. And so that beautifully shows you that the S&P are measured in something that is actually more reliable, more stable, and can't be printed out of nothing, would actually be considered in a deeper bear market already. And so that obviously shows you that it's just a matter of time until we do see the S&P drop against the dollar as well. And that is exactly why we've opened up the dollar here as well, because whenever we've recently hit this massive trend line here at the DXY, we've actually seen massive reversals to occur, which actually marked the beginning of those deflationary crashes that we've seen happening. Liquidity has been tightened. We've seen that obviously every asset class has been coming down. Why? Because obviously you measure natural gas, you measure gold, you measure Bitcoin, you measure equities. You all measure them in the same currency, which is the dollar. And many people don't understand that it's really important to understand the strength of the dollar, and to understand those cyclical cycles of money supply expansion and contraction and liquidity expansion and contraction. And so if you don't want to miss those videos in the future, please make sure to subscribe to our channel so you don't only support us, but also, as we've said, don't miss those videos on the markets, on commodities, on other asset classes, because obviously to prepare for those upcoming time, it's really important to understand those cycles. And as we beautifully see here on the DXY, we've had history repeat, and it might obviously occur again as we are currently hitting this trend line at the DXY, and that might also result in a strengthening here at the dollar. Now, if you would take this for granted, if you would say it's about to occur like we've seen happen here in history, we're about to see that reversal here at the DXY. We're about to see that this is about to keep on going, obviously leading to a bigger correction here at natural gas. That could obviously occur. Now the question is are we about to see a crash already now, or are we about to see another rally to the upside? And at this point, it's quite hard to predict, as we've seen the S&P actually drop or top out before the natural gas historically. We've seen here in 28 that the S&P actually topped out relatively before the natural gas price did. And so obviously energy prices tend to have the potential, before those crashes happen, to still rally a bit, as we do see those inflationary pressures. However, we might just have seen it here recently with this high at $7. And so we were quite concerned about the potential for another breakout here to the upside, as we've seen that massive bullish rally here recently. And so our primary objective is that we might see a bigger bear market occur here at natural gas, as we've seen all of those invalidations. We've seen the invalidation of this moving average here at the RSI, which we've retested once again, but we are currently moving to the downside again. We have seen that that cross here at the bull market support band recently. We've seen that volume is currently actually not really getting back to levels where we might see a breakout. Obviously, all of that can change anytime soon. Also concerning the daily chart, we are currently retesting really important support levels, and as we do see those actually invalidate, potentially we could see a bigger rally to the downside actually unfold. Where this is all about to happen is what you will see in our next videos, so don't miss them by just subscribing and give us a thumbs up so you really support us. Thanks for your support. See you the next time. Bye bye.